My name's Vicki McKay and I'm with southernmomflair.com, and I'm a homeschool mom with 30 years experience in accounting. Began selling on Amazon FBA and I needed to record that first payment statement. Facebook groups and webinars were no help in answering some of the specific questions I had for accounting. With over 20 years of experience with QuickBooks, I knew the software I wanted to use, and after creating a process, it was evident there needed to be a course to help others. To offer digital courses, I had to learn how to build a website. So I did that, and then I bought some recording software and put together a QuickBooks course. And that was about 4 or 5 years ago, and the website now offers several courses specifically for Amazon sellers, and we're branching out to other e-commerce users. Recently, we added new Excel-based sourcing worksheets for use on any platform or business model. Webinars are generally sales pitches wrapped in education. So let's get to the sales pitch first, shall we? I'll share my freebies and courses, and then I'll answer some common questions and those we received prior to the webinar, and hopefully we'll learn a lot in the process. The courses and spreadsheets that we offer begin with the QuickBooks for Amazon sellers. It comes in a PC, Mac, or online version, with Simple Start being the online. You'd choose the version that you want, and that would be the course that you would need there. QuickBooks for beginners is for accounting. It's more accounting and no Amazon. It's recorded in the PC version, but I think that it would be good for Etsy sellers in particular that maybe aren't in Amazon, or eBay sellers, or anybody that's not specifically in Amazon. The beginner's course would be really good for that. Now, the private label scenario is an add-on to the QuickBooks for Amazon sellers. It's recorded in the PC version, and it's just one lesson on how to account for private label stuff. If you already know how to use QuickBooks, you won't need the course mentioned, the top course. But if you don't, then this would add on to that. Bucket accounting for Amazon sellers on the QuickBooks is an add-on for the QuickBooks for Amazon sellers, and it's for those who want to use profit first, or that type of system without all the bank accounts. So it just helps you to divide your money up into buckets. It's a really good course. Now, the catch-up accounting for Amazon sellers is an Excel spreadsheet. It's not any QuickBooks in that. It'd be the one that you'd want to do if you haven't done any accounting all year and you just want to catch up your sales accounting for Amazon. You'd still need to do your other accounting, which would be for your expenses and stuff, but we'll talk about that later. It includes the worksheet that I use to do the 1099K reconciliation, so that's a really big bonus right there. Now, the ultimate OA sourcing spreadsheet is one that Jess and I did a video on recently, and you can find that in the resources. It's a good one for OA sourcing. The ultimate RA receipt calculator is a Excel worksheet or spreadsheet that's used for deciphering those long receipts from Walmart or Kohl's or wherever you're shopping, and it helps you to get your cost for each item, including discounts and sales tax and using gift cards and all that kind of stuff. So it's a really handy sheet to get your cost all divvied up. Now, the 1099K reconciliation is a service done for you, and so if you really don't want to calculate that and you just can't figure out that 1099K because they can come in looking like, where did this number come from, then you might want to check out that service. Also, the freebie for tonight is a year-end checklist. So it's an email opt-in, and you'll go to my website and just sign up for my email list. And believe me, I don't send very many emails. Once or twice a year is probably all I send out. So why are we talking about accounting on a webinar about year-end taxes? Well, the easiest way to teach accounting is to think in terms of filling in a tax return. And the easiest way to teach about taxes is to think in terms of accounting, or at least that is in my head. So when we talk about categories used to divvy up our money, we're talking about a chart of accounts. And you may have heard that term in other accounting areas. It's basically a list of names we use to distinguish the types of amounts we're tracking, like income, expense, asset, liability, etc. If we match our chart of accounts to our tax form, then it's easier to put those numbers in when tax time rolls around. Now, a common question is, I'm confused when it comes to taxes. Can you help? Well, I'm not a CPA, so I want to be careful about offering too much advice on taxes, but I will touch on some basic items here. And we're going to talk about sales tax, use tax, income tax, self-employment tax, and employer taxes. Now, sales tax is the tax you pay on items you purchase and the tax you collect on taxable items you sell. I'm not going to advise you on whether you need to collect tax. I will say that Marketplace Facilitators Tax has really helped minimize the ones you need to consider as far as states are concerned. Check with your CPA if you need help in collecting sales tax outside your home state. Otherwise, be sure to at least sign up for your home state. And yes, you need to continue to file a report even if your sales tax is zero for the pay period for all the states that you're registered in to collect. Now, if you're needing to get a report for sales tax from Amazon, the pro sellers have a report in Seller Central for sales tax under the tax document library. You'd go to Amazon Seller Central, click your reports, drop down, get your tax document library. Now, when you do that, you will get a list probably that Amazon has already prepared some. If you want to generate your own with particular dates, you can choose to generate a tax report here and put in your own dates. And when you get the report, it will come over under download CSV, and you'll go to the column EA. When you download this CSV, EA is the total tax amount. And so you can just click that and it'll give you the amount. And then if you're looking at here and you don't know what this means, for remittances, the report that you're going to get for the ones that you need to pay. So we call that remitting sales tax. And so that's for remittance. Now, if you come down and you see informational only, Marketplace tax collection report, this is Amazon showing the taxes that they collected and that they will remit for those Marketplace facilitator taxing states. So that's not ones that you need to pay. Now, use tax, it's similar to sales tax, but it is tax you pay if no sales tax was collected from you on a purchase that was taxable. So, for instance, maybe you have a tax exempt number or a reseller certificate, and you purchase inventory that doesn't sell, so you use it for personal reasons or you use it as a business expense item. Like maybe a stapler. I had this happen. So let's say you purchase a stapler to sell on Amazon FBA. So you sent it in, you bought it with no tax because you used your tax exempt certificate, but nobody buys it. and then you need the stapler in the office. And so you have it returned to you. We ask for it back, they charge us 50 cents, we get it back, and then we use that in our office. And so now that has become a supply or a material. It's actually an office supply, I should say. So that's going to be an expense, and so now we would owe use tax on it because we didn't resell it, okay? So usually it's the same amount as the sales tax. I don't know any exception to that, but you may have that in your own state. So the sales tax would be due on the amount that you paid for it, not the amount that you would have sold it on Amazon for. So if you bought it for, say, $10 and your tax rate is 6%, you would owe the 60 cents. And basically, at least in my state, we just add that to our sales tax report, and then we send that extra in, okay? So if you have an issue with that, you might want to check with your CPA. Now, income tax, that's the tax that's due to the IRS on Form 1040 or a similar form. On the income tax form, you use schedules to show all your business deductions and depreciation, etc. And you also show your income. Having all your reports handy will make the filing process so much quicker and less painful, and your CPA will want the cost of goods sold, the profit and loss, and a balance sheet, beginning and ending inventory, and the purchases for the full year. Using QuickBooks, these reports are simple to run. I don't believe GoDaddy offers these. We will look at cost of goods sold in some upcoming slides. We will also look at a couple of examples of the balance sheet and profit and loss too at the end. So the self-employment tax, it's a Social Security and Medicare tax primarily for individuals who work for themselves. So it's similar to the Social Security and Medicare tax withheld from the pay of most employees. And if you use software to file your own taxes like TurboTax, the self-employment tax is automatically figured for you. Now, your employer taxes are taxes due for matching employee Social Security, Medicare, federal unemployment tax for employees, and some states, some state unemployment. And if you do not owe income tax, even if you don't, employer taxes are due if you have employees. And sometimes business owners are maligned for not paying fair income taxes, but remember that business owners pay a lot of taxes individuals do not pay because they're matching those employee taxes. Now, employer taxes should be set up or held in a separate account to make sure they are available to pay when due. Now, if you have a payroll company or use QuickBooks payroll, the taxes are withdrawn within a couple of days and set aside in accrual accounts to pay when due. Now, using bucket accounting, or the course that we have on the website, is another option for setting aside funds of all kinds. Now, independent contractors are not employees. We do not pay employer taxes on their wages or fees. The 1099 miscellaneous is required to be sent to non-incorporated U.S. contractors. You pay $600 or more per year. Now, hint, PayPal. If you use PayPal, they are required to do the 1099 as a third-party payer. Amazon is a third-party payer as well, and so the 1099K is similar to that. So when you're confused about the taxes and where to send them, hopefully this little diagram can help. The sales tax and use tax goes to the same place. The states where you're registered, you're going to fill out that tax return. And usually it's monthly or quarterly. And then the annual income taxes are paid to the IRS, and you can actually pay ahead of time some estimated income taxes at the EFTPS, and you can use that link to take you right there. It's a free service of the IRS to let you pay your income taxes, or any other taxes, your employer taxes and stuff can be paid there as well. And this is just their information, again, give you a little more on that. So the ones that we're going to look at for the most part is the income tax and self-employment tax, which we're going to look at the Schedule C in a little bit more detail. So if you still need some more information, you can use that link for the Self-Employed Tax Center, and that'll get you a little more in depth. A question that we had prior to the webinar is, I plan to start either QuickBooks or GoDaddy in January. So do you have any thoughts on each, or anything I should do to make it easier? Yes, there's a lot of thoughts on that. So QuickBooks is real accounting with debits and credits, and GoDaddy is like a checkbook program. Profit and loss, the balance sheet, inventory tracking with cost of goods sold is all included in QuickBooks if you want to use the inventory tracking, but not in GoDaddy. And GoDaddy has some automation for Amazon. QuickBooks Online can too, but not QuickBooks desktop software. Of course, it comes with, if you're using it for online, there's some extra fees, and there are some services that do it for the desktop, but I've not ever used them, so I can't recommend them. QuickBooks Desktop is available in PC or Mac and can be installed on laptops too. It's confusing sometimes. People don't think they can put it on a laptop, and they think they have to be tied to their desk, so that's not true. Now, CPAs prefer QuickBooks over GoDaddy because of the reporting available, and that's what they use, so they like it better. And QuickBooks Desktop Pro can have multiple businesses in one software. Online requires additional plans, so if you want to use the online service and have more than one business that you want to account for separately, then you'd have to have more plans. Now, you can have other streams in your same business on QuickBooks Desktop Pro or online if you're using your chart of accounts to separate those businesses. QuickBooks can track multiple sales tax accounts or states and multiple currencies. QuickBooks is flexible and can be customized to meet the needs of the business owner. The chart of accounts available in QuickBooks allows for drilling down in expenses and revenue streams, and I'll try and show you a little bit of that when we look at the profit and loss and the balance sheet at the end of this presentation. QuickBooks allows for receipts to be attached to all transactions. No more stacks of paper receipts. New for 2021, and I think it's on our next slide, it is, they are offering with the new desktop a way to take pictures of your receipts and have them come straight into your accounting. So I think that's probably worth the extra fee. But we'll talk about those prices in just a minute. QuickBooks works well with Inventory Lab. Let me go back and ask the question, does it make sense to use QuickBooks for accounting and Inventory Lab for inventory management? Can they be used together? Now, that was a question prior to the webinar. So yes, they can be used together, and they do work well together. Using Inventory Lab and QuickBooks together can make the accounting process easier. I teach in the courses how to, I don't assume that you're using Inventory Lab, so I teach how to create invoices and post payments and all those kinds of things, which you can use for any platform. But if you are using Inventory Lab for your Amazon stuff and you want to skip that part, then you can use the cost of goods sold coming straight from your Inventory Lab profit and loss report, as long as you're keeping those numbers up in your Inventory Lab. You want to make sure all those figures are in correctly, and I'm talking about the cost of the products that you're selling. Now, in QuickBooks for Amazon sellers, I teach how to track inventory in the desktop version, but not in Simple Start, because Simple Start doesn't allow for inventory. So that would be a good time to use Inventory Lab if you want to do that. Also, using Inventory Lab with Simple Start might be a good way to get started with accounting, and it runs about $25 a month. It is the cheapest plan that is real accounting. There is a another plan that is self-employed plan, and it's more like what you would think about GoDaddy as far as like a checkbook thing. It's made for just tracking expenses. It's not made for inventory. Okay, and it doesn't give the reports that you need, like the profit and loss and balance sheet. Now, the QuickBooks Desktop Pro does come in PC or Mac. I've said that before. The price did increase in 2021, but it's still cheaper than the online with inventory tracking. If you want to compare those, desktop is now, I think it's $3.99 on Amazon for a download, and it's a one-time purchase, versus QuickBooks Online Plus, which is the plan, the least plan you can get and still have inventory tracking, and that's $70 a month. So you wouldn't necessarily need that if you're using Inventory Lab, but just to give you an idea of what the prices are. And new in 2021 is the QuickBooks Desktop Plus PC, which is last I checked $199 on Amazon, but the list price was $299 for an annual subscription, and it has the mobile receipt entry. So that's the cool part, and it also has data backup in the cloud. So if I haven't done any type of bookkeeping all year, what do I do now? Okay, so we're doing this. This actually came from the pre-webinar questions, and this is being recorded in November. So if you haven't done any accounting for all year and it's November, I would definitely get the catch-up accounting course for Amazon sellers to take care of the Amazon sales. You're still going to need to do some other things, but this will give you the tools to figure your profit and loss for Amazon sales only in as little as a few hours for a whole year from scratch. You can use it for monthly sales too if you don't have an accounting system set up and you need to do this even into the next year, where you're just keeping up with the business expenses and stuff for the Amazon sales. Okay, you could add pages to the workbook and do, keeps up with some other stuff. if nothing else, this would be a good place to store some of those receipts and information. Then the worksheet can be used to reconcile your 1099-K as well, so that's a good thing. You'll need to come up with deductible business expenses by pulling out all your payment registers, so like your credit card statements, your checking, that kind of thing. And you'll need to make note of all your business income. I'm still answering the question, what do I do if I haven't done anything? Okay, so you'll need your business income, you'll need your business expenses. You'll want to make note of your physical inventory. So you need a beginning and an ending inventory. These are totals that your CPA is going to need, or you're going to need if you're filling out your own taxes. Plus, you're going to need the total amount of the inventory purchases you made for the whole year. So if you're taking the beginning balances and adding those purchases and subtracting the ending balance and getting your cost of goods sold. So I do give you a calculator in the catch-up accounting course that walks you through getting all your information from Seller Central for those Amazon sales. And the little calculator does all the numbers, gives you a place to put all your numbers and calculates it for you. You'll also want to look at PayPal or any other third-party payers and see about any other income. Your business expenses are defined as expenses that results in taxable income. So basically, did you spend money to make money? And chances are it's deductible. So ask your CPA if you don't know if something's deductible, but he won't know to deduct it if you don't tell him you suspect that you have deductions. So keep your receipts. The worst case scenario is an expense is not deductible. You still need to account for it even if you can't deduct it. Your Schedule C, we're going to go over that a little bit more in detail, but if you print that out or pull it up in the PDF and just plug in the information that we listed above, then you'll be well on your way to coming up with the totals you need for filing your taxes. And then if you haven't done any accounting all year, you're going to want to start the new year with a new process. And I would encourage you to get QuickBooks if you're needing to do full out accounting. And still, if you're just starting, like I said, you can use the same worksheet in the catch-up accounting course to be able to do your monthly sales, and you'll see that in the catch-up accounting course where it'll suffice for a little while. So the Schedule C is the next thing that we'll talk about, and it's basically you're looking at the full page. It's actually 2 pages on the left-hand side, and I pulled out the parts so hopefully we can see them a little better. And the first part, or part 1, is income, and so you're going to put your sales receipts, get all your income, and that'll go at the top part. And if you'll look at line 4, it says cost of goods sold, and it comes from line 42. So that's a few lines down, another section. Part 1 is income, part 2 is expenses, and cost of goods sold is an expense tied to inventory. So it's not going to fall in part 2 because these are actual business expenses that we can claim. These are ones we'll talk about a little bit more as we go down. I'll give you some examples. If you look at line 27A, it says other expenses from line 48. And that's in the next section, and that's where we would divide up the other expenses that don't show up in this top part. Now, line by line instructions for Schedule C, you can get those from the link there. Now, this is the other expenses I was talking about. So maybe you have some outside services that you pay on a regular basis, and they don't fit in any of these categories per se. And so when you are doing your accounting, you can make a account for other or outside services and then do sub-accounts for those other services. So say you have software that you are, well, maybe not software, let's say you have you're ordering, leads and that kind of thing, and you are getting this every month or every week, and so you want to be able to keep up with how much you're spending there. Other expenses are outside services, that kind of stuff. Now on the part 4, this is on your vehicle information or your mileage. When you're doing the accounting, you're going to be able to put into your business under your expenses, number 9, car and truck expenses. Now, you're either going to do car and truck expenses at that amount, or you can do the mileage. And generally, I find that mileage pays me better, so that's the one I end up using. So I use Mile IQ to track the mileage. Now, I used to pay like $50 for that, and I've now discovered that it's available, or it has become available in Office 365 in my plan. So you might want to check your plan if you have that, and if you do, you can get that free. If you are using some of the QuickBooks Online, they have a mileage tracker as well. You can use a notebook. You're going to need the information that's on this part 4 here, and so whatever you are using to track that, this is the information you need, and that all comes in Mile IQ. The cost of goods sold. Now, this is the part that we're talking about some other expenses that are not in this part 2 expenses, because remember we said that cost of goods sold is expenses tied to inventory. We're going to look at this a little bit more in detail in a minute. So another question from before the webinar was, do you have a list of business expenses common to ecom? Oh, yeah. Here we go. So we talked about the car and truck expenses. Employees pay. Now, it's employees pay, but also virtual assistants, contract labor, and insurance. There's business liability. If you're with Amazon, then you should have a business liability insurance policy. Employer health insurance, business auto. This would be if it's a solely business vehicle. Self-employed health insurance deduction is available. It's not in the business expenses, but it is on Schedule 1, not Schedule C, but Schedule 1. And there's a link there, you can see where that's at. Interest, so you have business loans and credit cards, legal and professional fees like your lawyers and CPAs, or if they're helping you with your LLC or your incorporation. Taxes, so sales tax on purchases, usually that's part of your supplies and materials, or something of that nature. Employer portion of taxes. Rent expense. Now this would be for a place of business, not your home. So make sure that if you're going to have a rent or mortgage payment, that it is for a business location. Travel and meals. When away from home, from your home city overnight on business, think about trade shows or out-of-town sourcing or employee meals. Business use of your home. This area needs to be exclusively used for business. Supplies and materials, so poly bags, labels, paper, ink, tape, boxes, software, computer items, like your mouse or keyboard. Now, outside services, this is what I was talking about above, or just back a couple of slides for the other expenses. Maybe you have a payroll system, payroll service that you're paying every week or month or whatever. Monthly apps or extensions like Chrome extensions, and there may be some fees there. Inventory Lab if you're paying them. QuickBooks Online if it's the monthly one. The OA leads may be listed out as part of part 5 on line 48, other expenses. And that's what we were talking about. Advertising would be like Facebook, YouTube, Google, web design, business cards. Bank fees, like for your check-in or credit cards, any NSFs or money orders, EFTs. Education expenses, like your eCommerce empowerment, any QuickBooks courses, webinars, books, licenses and regulatory fees. So if you have a business license or your incorporation or LLC has annual fees for re-registering every year. Repairs and maintenance to real or personal property. Utilities, telephone, power, water, all of those. These would be like a portion. What you would do, or what I do, is I will account for the full amount of these, even if it's for a home, and then use the percentage of my home office expense. So if you're not familiar with what I'm talking about there, check with your CPA. At least let them know the amounts you have in utilities and the space that you're using for your business and your home if you are working out of your home, and then you can, they can set up the portions. Also, any subscriptions to trade or professional publications. And I already told you that the cost of goods sold are expenses tied to inventory, and sales tax charged on inventory purchases is part of cost of goods sold. Which expenses are not deductible? Well, bribes and kickbacks, for one thing. Now, I know that's silly. We're probably not trying to do that, but this was part of what was on the IRS website, so I just wanted to throw this in. You can't deduct penalties and fines you pay because you broke the law and not that kind of stuff. So I did want you to see the entertainment expenses. It says that you can't deduct entertainment expenses, but you can deduct employee and client entertainment, or basically like meals, if it's business related. So say you have an employee, or you have a group of employees and it's super busy, and it's to the benefit of the employer to have that employee stay through, say, lunch or dinner, and that in doing so they're making more taxable income, now that would be a deductible expense, okay, at 100%, where a client entertainment or meal would be at 50%. But, check with your CPA and make sure I'm telling you right, okay? Now, how can I calculate the cost of goods sold? I already hinted at this earlier. And here's your equation. You're going to take your inventory at the beginning of the year, and you're going to take your purchases, less any items that you took out for personal, and any cost of labor if you're making product, manufacturing it, and the materials and supplies for that. So you're going to take all of those and add them together. And then you're going to put in your end of the year inventory, and you're going to subtract it from that first total. And that's going to give you cost of goods sold. I know that's kind of a lot of stuff, isn't it? But if you're using the catch-up accounting, then I'll walk you through that on how to get that information from, if you're using Amazon, if you're selling on Amazon, how to get that information from Seller Central, which really helps. And then if you're using Inventory Lab, you could get the cost of goods sold straight from there. You wouldn't have to do this calculation. You'd run that P&L report for January 1 to December 31st as your filter, and that could give you cost of goods sold. And if you're not selling on Amazon and you need to add and subtract the same way using whatever reports you have at your disposal. So, even if you're selling on eBay or somewhere else that you have physical inventory. I know a lot of Etsy inventory seems to be digital, but some of it is handmade, and that is inventory. And so you're going to have to use this calculator. So let's look at a little bit more in depth here. Say you just started, then you can go back to the first of the year and get the day one. What was the cost of the inventory? That would be your inventory beginning. If you were selling last year and you had an ending inventory last year, that would be your beginning inventory this year. Now, you're going to add all your inventory items you purchased all year long. Remember to deduct any of it that is not wasn't business you used for personal, and if you did do that, then you may have that use tax we talked about. Now, if you make your own products, you can add the labor cost of making it, and some states charge use tax on such labor performed by employees, so check with your CPA, but don't include any of the amounts you paid yourself. They're distinguishing here that this would be if you're paying employees. So the labor costs are usually an element of cost of goods sold only in manufacturing. Small merchandisers or wholesalers and retailers usually do not have labor costs that can properly be charged to cost of goods sold, and that's in that same publication, the IRS 334. Materials and supplies here, it's talking about these ones used in manufacturing goods, not the ones we were talking about for like poly bags and stuff. Containers are, say you have a box or a bag that you made or created to be part of the product that you're selling. So it's an integral part of the process that would be considered as a container. And the freight in, I see this more like having things shipped in, then you can use that as part of the cost of the product. Overhead, this would be if you had a manufacturing outlet where you were, that's all you were doing there. And so you had that as part of your cost of making that product. Okay, so now we're getting close to the end, so let's see. We're going to compare our P&L, or our profit and loss, with our balance sheet. Now, doing this to show you what is found on each one of them and why they're important. So the profit and loss shows income, cost of goods sold, expenses, and net income. In QuickBooks, we can drill down on any main account as shown. So I'm going to try and put my pointer up here so you can see what I'm looking at. Let's see. Let's get let's get one that looks good. Maybe this one. Okay. So here's your income. And then your first account, merchandise sales, and it could be for marketplace. And then the 1099 calculations, this is something I do so that I can know ahead of time if I'm getting close to that figure. And not everything that is in your sales report is going to be part of the 1099K. And so I separate those in my accounting. But say you had Etsy, for instance. So you would have merchandise sales, Amazon, and then you'd come down and you'd have merchandise sales. It'd be under this same hierarchy. And then you would come down, you would have Etsy here, and then you would have whatever has to go with Etsy. Okay. Cost of goods sold. I like to have the cost of goods sold match any of the merchandise sales. So instead of lumping it all together, I can get my true numbers for my cost of goods sold. This is actually from the QuickBooks for Amazon sellers, so it doesn't have those actual broke down into other platforms. And then expenses, you can see that you have them. You can have them here. This is just one, so expense, and then you'd have individual expenses, but you could have selling fees, for instance, broken down into, Amazon has a ton of different selling fees, so you can break those down if you want it to. Okay. So this is the balance sheet, and the balance sheet shows assets, liabilities, and equity. In QuickBooks, we can drill down on any main account as shown, and notice the different checking accounts. So it's the same sort of thing as with the profit and loss as far as the accounts go. So we have checking and savings. We could have Amazon reserves, gift cards, checking, whatever. The same goes for your current liabilities. So say you have a credit card you owe, you could have this credit card, you could have another credit card, you could have another credit card, and have them broken down and post those transactions to each of those cards. Other current liabilities like sales tax payable, you could have that broken down as well to different entities that may be owed. And if you put them side by side, then you can see that they look different, but kind of the same. One of the things that you'd want to look at is the net income. Here, the 20760 and the net income 20760. So if you're running your reports in QuickBooks and they don't match, it could be that you have your date range at the top wrong. Okay, so ideally you would want to have this fiscal year and then this fiscal year. It's just so happened I only had a few things in this demonstration, so it worked even though I actually was off a little bit in my filters. Now, you will notice also that report basis, you can do accrual or cash, and when you're running these reports, you need to run them both the same. And if you're not sure which one you need, you can ask your CPA, but a lot of sellers that I know use cash as the type here, and it used to be that if you sold inventory, you had to use accrual, but that's not the case now, and I use the cash method here, but the accounting for inventory is actually accrual. So it sounds a little confusing, but you are actually using accrual for the inventory in QuickBooks, and cash can be here. And this basically means you don't have any accounts receivable. Accounts receivable would be you sell something to someone and they pay you later. So they are using you as if you are a creditor or vendor that they owe. And so that should be accounts receivable. And if you were doing that, then you would probably need to use the accrual. Net income or loss should match on both reports. We said that. If you do not, then the dates may be wrong, and the cash or accrual. We talked about all that. Now this is to show you that there are different reports and a ton of them in QuickBooks. And this is the drop down from reports and vendors and payables. And you can see the little arrow here, and that gives you all of these reports. So each one of these groups has an arrow, and that gives even more things. So the sales tax liability report is the one we were going to look at. And so it has a total sales, non-taxable sales, taxable sales, tax rate, tax collected, sales tax payable. All that are these columns across here. The no tax vendor is my Amazon default, so that says no tax vendor here. And I set that and show you how to do that in the course, but I do that when I'm making invoices because I don't want to have to change the taxable or not on every invoice. And then the Florida sales tax here showing 7%. It's 6% statewide, 6.5%. Some of these other counties, and those can be broken down as well in the items list. So you could have Florida sales tax and have the different ones, and it will calculate them out and shows you here that it's 7%. Inventory valuation and reconciliation. This is one of the things that you're going to do, or probably the main thing you're going to do at the end of the year is to make sure your inventory is correct. And it wouldn't be a bad idea to do it monthly. So basically you'd come in and go to the reports, go to inventory, and do the valuation summary. And what that's going to do is show you this. Okay, so in your inventory asset value is here, and it should match the inventory asset value here. Okay, so this is your balance sheet, this is the amount, and this matches. So that's good. If it doesn't match, I show how to search that out in your QuickBooks course as well. So that is the end of this presentation. I hope that helps.